Money move, money move. Want you to do the money move, money move, money move. Want you to do the money move. Just you put your two hands in
Thanks
your
again, Pat.
pocket. Now
Hello,
take out
guys.
some money for all your brethren.
Where do you want?
Yeah, good to see you.
Save some money for little Harry.
You give me the middle?
I'll let you choose. You take the sofa. There's.
I think these guys said that I can take the biggest chair because I've got the biggest arse, but that's another story. Welcome, and welcome to a conversation where I think regulation meets innovation, because we have an institution that's several decades and centuries old versus one that's just a newborn. Finding out the different perspectives and attitudes that these two organizations and their leaders have. So I think to begin with, we just need some perspective, and what I'd like to do is ask Martin maybe to begin by just introducing a little bit more around Commerzbank. I mean, most of us know the Commerzbank. We may not know that you have 1,000 branches, that you own 70% of mBank in Poland. So maybe just a little profile of the bank.
Well, we are the second largest bank in Germany. We have about 16 million customers. We service not only retail customers, but also SME and corporate customers. We are, for example, doing about 35% of the German import-export business in transactions. So, and we operate also in Poland, as you said. We are the majority shareholder of mBank, one of the most innovative banks, I think, globally. So we do a lot of things, but yes, we still have branches, we still have legacy systems, and we still need to innovate. But I think what we see in the fintech area is a huge challenge, but also a huge chance for us, because we are investing heavily to service our customers and to basically use that to gain additional market share. And so far it works. We're gaining about 250,000 net customers yearly. So in the moment, it's very challenging, but it works.
You mentioned some legacy. How old is the bank? What's the heritage?
Well, the bank was founded in 1870. So it's 145 years old. But if you look, of course, part of the IT systems have quite some age. But on the other hand, it's very robust. We did one of the biggest IT projects in continental Europe, i.e. we fully integrated Dresdner Bank onto our system. So we moved all their customers, about 4 million, on our system, and it worked, and it's still stable. So that is also something that needs to be taken into account, that some of the little bit older systems are like good working horses. They just do their job.
So you've got a mega bank here, over 100 years old, millions of customers, trusted brand, well known. What makes you think you can cheekily try and attack banks like this? I know you're not attacking Commerzbank, but in the UK, you're one of a number of startup companies that's going to be challenging the big banks. What makes you think you can do that?
There's a couple of answers to that. I mean, first of all, I'd like to say we are 145 days old as a bank, so I have nearly as many days as Martin's bank is years. But no, the short answer is we're trying to do something different, slightly different from what the banks are doing right now. We received our license on the 30th of November last year, and we've been working for a couple of years on, we'd like to reinvent the role of the bank. So today, for many, the bank is more of a money store than a helper, and we'd like to build a bank which actually actively assists customers and transforms that relationship to one of trusted partner, which obviously is something that in some ways banks deliver today, but we think we can complete that and actually maximize customer lifetime benefit rather than just maximizing customer lifetime value.
So your day's old, and the differentiator is going to be, I guess, from what you just said, around the experience the customer receives when they sign up to Tandem.
Yeah, I think I'd actually divide it into different categories. There's a number of things that don't work very well in banks, and we need to fix those. I think, from talking to Martin earlier, Commerzbank is already making good strides in that direction. But we think of those as the hygiene factor pieces. So yes, absolutely, origination needs to feel like falling out of bed. Get rid of the application paradigm. Any of you who haven't seen our What If Your Pub Was Like Your Bank video should check it out on YouTube. But they ask them to apply for fish and chips, ask them for their mother's maiden name. It's rather an interesting paradigm. But there's a number of these hygiene factors on one hand that we need to fix. So there shouldn't be application. This should be, people are trying to buy your product. You'd be trying to help them do that absolutely as quickly as possible. On the other hand, there's this stuff that's inventing something new that the banks don't really do today. The banks don't really help you manage your finances in any way whatsoever, and so that piece is actually where a lot of our innovation is going. Although our results will also be driven by the ability for customers to access their money easily. Passwords are one of the biggest bugbears in the modern world, full stop. And to be able to use decent biometrics to allow people to access their accounts very, very easily, to allow them to buy the products quickly, to allow them to get good servicing in the channel of their choice. These are hygiene factors that we have to address in order to transform banking.
I mean, one of the things I often say is that for an incumbent bank, the hardest thing is to try and compete with a digital bank, because incumbent banks are built on physical structures that are embedded in place by technology, and you have to break out of that, and it's really difficult because you can't change the core systems. So how would Commerzbank react to a small, admittedly, but nimble competitor that's launching digital services like this?
I think what we have to do is basically always check what is new, what is working, what are customers really trying to achieve, and how do they want to be serviced, and invest in this kind of technology. So I still remember, we talked earlier that in my first life I was a McKinsey consultant, and I still remember at the end of the 80s we were writing studies based on market research that direct banks, telephone banks that got established at the point in time would be the end of the branch bank system, and that by 2005 most of the branches needed to be closed because people would do all the stuff on the telephone or via fax. This hasn't happened. Why has it not happened? Because it was not static in the banking system, because banks started to also introduce telephone services, fax services, later internet services. So I guess we will be not the ones doing all the innovation, because a lot of the fintech companies will be much faster. But if we adapt that, and if we take the goods part and be able to offer these services fast enough, then the service differential will be very limited, but our ability to serve customers also physically in branches will be a differentiating factor. And we talked about mBank in Poland, which was established in 2000 as a pure online bank. It's now the biggest online bank in Central Europe, with close to 5 million customers, and it was established as a pure online bank, no physical presence. Well, after a certain period in time, the colleagues in Poland realized that they can even gain more market share by also having a limited amount of physical presence. So they started with a light branch concept. And they opened these branches, and they are used for actually customer acquisition, much more than customer transaction and customer service. And it works perfectly well. So that tells me that if you design the system smart enough, you can still compete with a lot of startup fintechs.
Yeah, I think it's interesting, the branch question, because I know a digital bank like Banco in Italy, for example, is saying that their branches are their marketing program. They're first of all for trust, because it builds customer trust. They can see the money, see the people. Secondly, it's there for service, and thirdly, it's there for brand. Is that how you would see branches? And how many do you need? I mean, in Germany, well, you were saying, I think it's 32,000 branches.
The whole system in Germany has about 32,000 branches. Yeah. I guess that in the next 10 years, at least a third will be closed. And while we, for example, have about 7% market share of the retail banking market, we only have about 3% of the market share of the branches. So we're already ahead of branch productivity, but we will continue to work on it. And the final answer to your question, how many branches do we need, is up to the customers. How often do customers come in there, and how many more customers can we gain to basically fill up the existing system, and that will decide about the final number. But the interesting thing is, I still remember in the financial crisis in 2008, there was this Icelandic bank, Kaupthing, that went bust. And they had a subsidiary or branch in Germany, which also went bust. And it was a pure online bank, and suddenly customers were left without bank, and they basically didn't know where the money was. So they looked at their account statement and saw where the bank was chartered. So they drove to that city, trying to find the bank, the physical location, to grab somebody and yell at him, "Where is my money?" Right? And I think this kind of, I want to know where I can physically go if there's a problem, and yell at somebody and ask him, "Where's my money?" is also part of that trust relationship. Do you need, I don't know, 5,000 branches or 1,000 branches or 500? I don't know the exact answer. But if you're only virtual, it's probably also not good enough.
Yeah, the psychology of money is very different to the psychology of selfies, for example. I don't mind losing a selfie, irritating, but if you lost my money, I'd be very annoyed. And in your case, I guess, it was interesting you mentioned whilst you were talking before coming on stage that Tandem would actually quite like to have some branches. You can't do that from day one, but maybe longer term you'll be opening some.
Yeah, well, we're going to have one branch in our head office from day one. But we looked at, the customers. We want to be a mass market bank. We want to build a big bank, not a little niche bank. And therefore, we'd like to be able to serve as many customers as possible. However, we looked at the demographics around the customers who insisted on branch banking, and the truth is they're all going to die quite soon. So we thought, probably don't go after that segment, not for the moment anyway.
One of the interesting things I think that, again, illustrates the difference between a digital bank and an incumbent bank, although it's quite interesting, your answer to this one, Martin, but what's the KYC process, Ricky, that you're using to, if I want to open an account and you need my details, how do you verify that it's me?
So our best KYC process, because as Martin will know, with all processes there are the happy paths and the not so happy paths, but our best process will look like taking your Android phone, tapping it on your passport. We'll read the details from the NFC chip in your passport. We can pass all that detail. We'll go quickly to Interpol database and check that your passport hasn't been stolen. And then we can go away to GB Group and pick up the remainder of your data, pre-populate your application form, and press apply when you want to apply for the product. Needless to say, you have to have your passport to do that. And actually, today, if you have an iPhone, that won't be possible because the NFC reader doesn't work in the same way. But yeah, that would be the ideal KYC journey.
So account opening is almost as simple as falling out of bed, going back to your
yes,
comment.
exactly.
And most of the incumbent banks I talk to say, "Oh, we could never do that because we have to have a branch, we have to see you, you have to sign documents with ink." But you then said you don't have to do that in Germany.
No, for account opening, you could basically sit in front of your PC, look into your camera, smile, put up your identity card, wave it, and that's basically got screened and photographed and would be a valid, regulator-approved KYC identification.
And was that a change, going back to your comment about that in the law there was this requirement to have a wet ink signature?
Wet ink signature in Germany you need for credit.
Okay.
So what you couldn't do in Germany is you could not have a customer going to a store, seeing something that costs, I don't know, 500 euros, applying for credit, which we could all do, score it immediately, and tell the customer immediately he could get the credit. What you could do in other countries, like for example Poland, the customer would then accept by using his normal transaction number for money transfers the credit, and then he could basically use that to pay immediately. That in Germany would still require that you find a printer, print out the stuff, sign it, and send it back to the bank to get the money, which basically means you can't get that while you're in the store. That has to do with credit needs, wet ink, and it has more to do with customer protection than with KYC, because people believe, or the regulator or the consumer agencies believe, that if you can buy credit immediately and then use it, you might be fooled and tricked into something, and therefore they want this kind of sleepover and be protected and it's in the civil code, so you would need to change that to make a more seamless process.
Talking of consumer protection, I mean, you've got this regulation versus innovation crunch, really, where the regulators are saying that they don't want a lot of disruption in the financial markets because it could cause uncertainty, and yet at the same time they're encouraging new startups like in Germany, number 26, Solaris Bank, Fidor Bank, a number of new licenses being given out quite quickly, and Solaris I think got their bank license in 12 months, which is incredibly fast. So is the regulations in Germany encouraging innovation, or is it a barrier to innovation?
I think getting a license and convincing BaFin to start a bank is something that is doable. I think that certain regulation around consumer protection in Germany are probably more difficult to cope with than in some other countries where you can easier use customer data or offer online services directly than you can currently do that in Germany. But that seems to be more the law and the data protection agencies than the banking regulator that is basically here on the break.
And getting a license in the case of Tandem, was that difficult?
Yes, in short. I mean, first of all, in order to apply, you have to have a team of a certain standard for them to consider your application, and that often involves actually having quite a large number of your team already hired, or at least quasi-hired in a sort of startup part-time way. In addition, you've got to fill in 2,500 pages of application form, which I think will hopefully get a little easier over time. But right now, there's actually nobody in the UK that can tell you how to do that. We went and spoke to some law firms. They pretended they knew what they were talking about. They didn't. We went and talked to what will not remain unnamed accountancy firm that said they definitely knew how to do it, and embarrassed us in our first session with them, with the regulator, as they'd done it completely wrongly. So it's a little tricky in that it's not available on the market, to buy the knowledge of how to fill this in. So you need, experts who are able to do that. But our process was still relatively fast. Our first meeting was in July 2014. Our license was granted on November 30th, 2015. So a year and a half, not a ridiculous amount of elapsed time. But there's lots of people who've entered the process. You mentioned earlier, 29 banks in the UK. The government intends to give out, the Bank of England has talked about 4 licenses this year. They gave out 4 last year. So, there's a bit of attrition between the beginning of the funnel and the end of the funnel in terms of the quality of your application and the quality of your proposal.
So if we're looking at the different challenges that you both face, maybe start with you, Ricky, because I got a figure from the FCA, the UK regulator, that you need about £20 million of funding just to get through the gate to launch a UK bank. Whether that's true or not, I don't know, but that was the rough figures they were giving me. You need a lot of diligence on who's on the board of the bank. You then got to obviously choose all your technologies and partners to develop the technologies. In a nutshell, what sort of process have you been through, and what's been the biggest challenge?
It's a good question. I think the systems design and making sure that you're building something that's future-proof is one of the hardest pieces. We're very aware of the advantages that we have today, not having legacy systems of the bank, but we're also at a point where modern off-the-shelf banking systems do not exist, not ones that have been proven and are acceptable to the regulator. So you have a choice between sort of 10-year-old systems or combining them with your own software, or build it all yourself, which can be a challenge as well. So I think that's probably the largest piece of the challenge overall. But also, frankly, building, this is the same stuff of building any business, to be honest. Building a great team, getting the right culture where everyone's excited about being there and working incredibly hard, and organizing the team so that it's works efficiently and delivers your project on time and to budget. And to your question on the amount it cost. I was talking to Martin before, and I think for a bank to go through this process would cost, the setup would cost £100 million plus, maybe a couple $100 million. Atom Bank has raised 132 million pounds. That's public information, and may have spent a substantial amount of that getting through to their license. So I think it slightly depends on the approach you take and how stingy and entrepreneurial you are about the whole thing.
Mm. And I think, interestingly, going to Commerzbank, you mentioned Icelandic banks having problems a few years ago, but Commerzbank had some very bad headlines in 2009. And so I guess your challenge has been how to keep the bank structured in the process of re-architecting the bank and shrinking the bank.
Yes, if you look at our balance sheet or pro forma balance sheet at the end of 2008, just after our acquisition of Dresdner Bank, it was about 1,100 billion euros at the peak. It's now about 530 billion. So basically, we halved the balance sheet in 7 years, which was quite a challenge, and we did all this technical IT integration, integrated two branch networks and so on. So that was quite something we needed to do, and not forget to spend money on innovation to keep up with Rick and his friends. So, but in the end, it's doable, right?
Have you guys thought about starting a bank from scratch?
Well, actually, we have. And Commerzbank operates in Germany the biggest direct broker, online broker. It's called Comdirect. It has about 2 million customers. And we started that in 1994. And the funny thing is, and then we started mBank in Poland. And the interesting thing is, first lesson is, after 15 years, the startup has a legacy problem in its IT. So while you in the beginning believe you're state of the art, after a couple of years there's somebody more state of the art than you are because he started later. So you have to cope with that issue. Secondly, we learned that if you, and I also used to work in a direct bank that had its own IT and used certain parts from third-party vendors to do payment services and security services. And that bank was set up in the 90s, and then suddenly year 2000 approached. So we needed a year KY2 process to basically cope with the year 2000 at that point in time. Was a big issue. And this was very expensive because you had to do that for the small bank, full stuff. Comdirect, which was basically a Commerzbank venture, was basically working on the back-end system of Commerzbank. So they could get this transformation to year 2000 much cheaper because the cost was there once, but it was shared throughout the branch system and the new direct banking startup operation. So what I learned at that point in time, that scale in the end is the driver of profitability in retail banking. And if you have not enough scale and some regulatory changes or some IT changes or some technology changes happen, then it gets very expensive to cope with it. And those ones that have scale might have a significant advantage over those ones that are smaller. So that will be also a significant challenge in the future.
I think there's a key point there, which maybe both of you can comment on, because I think the problem that a lot of banks had in the 90s is that they thought technology was almost a static investment, that you built a platform and then it stayed in place for 10 years, or you wrote it off and decapitalized it over 10 or 15 years. And the fluidity of technology change is so quick now that you can't do that. Like Metro Bank, for example, told me that they had to completely overhaul their internet banking platform after 3 years from launch because it still wasn't giving the user experience they wanted, and they keep having to reinvest and reinvent. So you can't launch a brand new shiny bank and say, hey, and then leave it. So you've got to keep changing the bank.
Well, I think it's important because actually, I mean, and many in this room will be very familiar with this. The way we build software and hardware has changed pretty unrecognizably in the last 5 years. And I think anybody in the room who runs a software business can tell you that, building something, actually often the team that build the product actually needs to expand in order to improve the product over time. And certainly in our other businesses, Asimo CEO Michael's in the audience, we're investing way more now than we were when we built the original platform. So I think on the flip side, some of the technologies that we're using to build that are actually much more effective. And the way that we can build in terms of building blocks and being able to change small bits of it mean that a system built today will actually be less expensive to fix, substantially less expensive to fix than a system built 20 years ago, where it's all essentially one big black box, and you got to open up the black box and get working with it. Whereas we can actually do a lot of this stuff on the fly and continue to adapt and grow systems. So I think there is a shift there which takes away from those economies of scale. It doesn't delete them altogether. There's still still an overhead to running a bank. You still need to have a risk department and a chief risk officer and a lot of other nice people that look after your business. But I do think that differential is going down a bit.
Open sourcing of Commerzbank? Is the bank adapting to the changes of fintech?
Yes, I mean, we basically, in terms of our product offerings, for example, we have an app out there where people can check how much money they have on their current account and what the last transactions were. Now, if you would go 20 years backwards, they would have needed to go to a branch to ask the guy in the branches, how much do I have on my account, right? Now, today, I think this is used roughly 450,000 times a day, which already tells you that there is a lot of transaction on these kind of new channels. But I think the biggest challenge for us, Will, what Rick just mentioned, is how we retransform our core banking technology step by step, and how we automate and digitize all the processes to get rid of a lot of paper and basically system A working up to a certain point. Then you need to transfer the data into system B, and sometimes you do that by basically printing it and retyping it. And these kind of things need to be overcome, and there's a lot of work to be done, and that will also lead to a significant shrinkage of the number of employees in the banking system.
We're kind of running out of time, but I wanted to finish with a quick question to both of you, starting with you, Martin, because you're leaving the bank at the end of the month and going into a new life. So maybe if you were invited to launch a brand new bank in Germany as a digital bank or as a bank with branches, what would your brand new shiny bank look like?
I think that, yes, of course, I would start with a core system that is targeted for a mobile customer group, but I would always think about probably having a limited physical presence based on that basically mobile technology, which allows certain account officers to access this, to have a physical presence to basically grow, because I think you will grow faster in brand building if you have one branch in Hamburg, you will grow faster in Hamburg than if you have no branch there.
And similarly, Ricky, let's say that Tandem Bank does really well and gets acquired by Lloyds or Barclays.
I'm not sure that's winning.
And you get promoted to be CEO of a big mega bank that's had hundreds of years under its belt. What would be your priorities?
Yeah, well, priority is an interesting question. I do actually believe that sometimes in some of these organizations you need to, take out a little sort of ninja group that's going to actually work on your next generation bank. It's very hard sometimes to move systems on. But I'd probably form a separate cadre of people who are working on rebuilding the banking system. Now, obviously, that wouldn't be ready to transfer the whole business of the bank immediately. Probably a 5-year project, maybe take 7 years. But I'd be working on how can I rebuild this separately and test and learn as I go. So that at a point in the future I can migrate the entire thing across, and I'd probably have a brand, and I'd have customers that'd be experimenting with that new new vehicle to figure out what's the best way forward. So I think I'd probably end up birthing something on the side.
I wrote a blog a while ago. One of my most popular blog entries saying the best job in banking is chief cannibal officer. I'm there to eat the bank and try and destroy it and build a new bank. And on that note, Ricky, Martin, thank you very much for a fascinating conversation. Thank you.
Chris, thanks a lot.